Hi guys, Dan with Index Option Trading on December the 12th after the market close, and we're looking at a chart of Dow Jones here. And as you can see, we are above that 200-day moving average, and we're rocketing back and forth here. One day up, one day down. This day, which is 12/8, it was down. Last Friday, 12/9, it was up, and today we slammed again to 12,000, but we're maintaining above that 12,000 level, which is very, very important. And as long as we maintain above that 200-day moving average and 12,000, the market from here is consolidating, it looks like to me. If it doesn't break down below it, it's going to go higher. And it's poising itself. But there are a lot of events that are happening the market does not like. The European countries are having issues, and the rating agencies warned 26 countries that they may downgrade their ratings. And Fitch and Moody's said that it will start reviewing credit downgrades in January, but Moody's may or may not do that. But Fitch also sounded very bad and harshly. So the ratings get downgraded, and the fear of that the European countries would have these downgrades, it did not sit very well with the market. And so the market is kind of wishy-washy, even though the economy here in the US and things have improved and the numbers are coming right. Had those clouds been not on the market, this market would have rallied hard during the month of December, which it usually does. But somehow it is still on the holding pattern, and the rally could develop within the last 15 days or 10 days of the month. Then it still can come, and usually there is a Santa Claus rally which will take the market much higher. But it is this congestion pattern that is developing here is very indicative of some kind of a rally, because if the market is not going down, what is it gonna do? And that's gets the point. Let's look at it at the S&P, and you can see the same kind of a flag-like pattern here. This is the pole, and it's forming a flag-like pattern here, which is not complete yet. So one of these days it can break out and go above that 200-day moving average. What is important to note here, since August, which is 8th, 2nd of August, S&P only has closed 1, 2, 3, 4 times, 3 times, not 4. 1, 2. This candle was below, and this candle was below. So only 3 times above the 200-day moving average. That's about 4 months, 5 months. The market has not made it above the 200-day moving average, and it is lagging. So all these stocks are still lagging behind and creating a problem. PCLN, for example, right now here is a stock that is sitting at 475, and we're gonna have to take some very quick action on these things tomorrow. I'll let you know. It needs to go above that 490 level. Now, if you want to look at it, CMG, which is the restaurant group, and that stock moved up higher today, even though it's extremely overbought. So most of these stocks are overbought, but they're still moving higher. Some of these stocks are right now ready to break out if the market gets better, and we can start trading. Alta is holding up here in this pattern, 72, right above here, the 70 mark here, and it is extremely strong in the market right now. Panera Bread, PNRA, the other stock that we keep looking at it all the time, is making this formation of a pattern here, which is a bullish pattern. It needs to break down a little bit more and then go up higher. So that is what we're experiencing looking here. If any good news comes out of it here, the market may go up higher. Another condition that is weighing heavily on the market is the disturbances and the protest of the Occupy Wall Street that are taking place. Today was a big day. They targeted a lot of Wall Street banks and companies on the West Coast and shut down the ports, and that also does not sit well with the market. But you will not hear that in the headlines, because nobody wants to mention that Occupy Wall Street is having that much influence in the market. The stocks were crushed basically from the get-go.